All right, everybody. Good evening, good afternoon, good morning, wherever you are. We are Doc and Mav of ReadySetCrypto. For today is Wednesday, the 29th of September. Welcome aboard, everybody. Please do us a favor, beat the algorithm, hit the old thumbs up button, and let us know where you're coming in from today. How's everybody doing out there?
It's like we got another red day here, but for some, that's an opportunity. We'll get into that very shortly as to why things are dumping and what you should be doing about it.
Yeah, September is doing what September always does. So markets, there's a reason why things get weak in the month of September as we approach the last quarter of the year. And you know what we find is that financial markets are all tied together at the hip. So even though we kind of love the notion that crypto is different, unfortunately, it's still considered as a risk asset, and it's treated like a risk asset across the board. So we're getting more institutional participation in markets, which is good. But at the same time, when other markets go down, we have that tied at the hip problem. So we'll talk about that later on. Let us know where you guys are coming in from today. So we got Nature Boy. And we got Aaron in Ireland. Michael, hello. How are you doing? Greetings, folks, boys and girls. How are we doing out there? We got Michael coming in from New York. Welcome aboard, Michael. What else we got? We got DI from Los Angeles. We got Mitch from Chicago. How's Justin Fields treating you out there in Chicago?
I got a good crowd today.
All right,
awesome.
Good, Michael. Hey, Cameron from the UK. We got Seb RZ. Welcome aboard, guys. So what we usually do is we'll once we get everybody kind of ushered in here, we will, Mav will pick an obscure topic which few people are touching, and he'll go into it in depth. And it's usually something that a couple of weeks later, you got to pay attention, because a couple of weeks later, he'll say, hey, I told you guys about this asset and look what it's done. So it's worth paying attention to. And then what I'll do is, later on in the back half of the session, I'll go through some technical analysis on coins that you guys want to look at. We'll talk about the markets. We'll talk about the reasons why things are soft out there. And so again, do us a favor, hit the thumbs up button on there. Consider subscribing if you haven't already as well. But more than likely, you are subscribed if you are here. So welcome aboard. Glad to see you guys out there.
Alrighty. Well, with a little bit of preamble out of the way, thanks so much for joining us. This is always a fun 30 minutes or so, and it's good for us to kind of like midweek see where things are, start to look ahead, and start to pay attention to the trends and how we can take advantage of them. So that's exactly what we're going to be talking about today. And with a little bit of screen share action, should be nice and quick today. But yeah, as Doc was pointing out a little bit ago, typically September for Bitcoin is not so fun, but we're almost done, right? So yes, we are almost into the fun part of the year, as I like to see it. Typically October and November are some of the most historically bullish months out of the year for Bitcoin, the crypto markets as a whole. So, let's make sure that we indicate that past results do not indicate future, predictions or anything of that sort. But I think it's a pretty good bet at this point that yes, the market's been deflated for a little bit here. Yes, we've just had a massive, I would say, overreaction to the whole China banning crypto news that we got last week. And in fact, if we kind of look at that, if we kind of see what's going on there and take it beyond just the headlines, what we're seeing is that China is just reaffirming what it's already said basically since 2013, which is that it's not a fan of cryptocurrencies. It doesn't want them operating in its space. It wants the digital yuan or however you pronounce it. It wants a trackable currency that everyone has to use, and none of this crypto stuff that leads to capital flight and people having privacy and stuff like that. That doesn't fly in China. So this is just the Chinese central bank basically reaffirming that. And it got blown out of proportion, as it often does, to say, oh no, China is banning cryptocurrencies. They already did. That's not been a new thing for a long time. In fact, this was something we were dealing with leading into the run-up right at the tail end of 2017. So I only see this as good news or a good response because, hey, we're just reaffirming that, hey, crypto is banning China. We don't need them because it's a worldwide thing and it's coming from many different places with many different technologies.
Did you say crypto is banning China?
Absolutely.
That'd be awesome.
Oh, of course. We don't need Chinese innovation here, especially because this is about free and open and transparent, just everybody on the same playing field. And China always wants to rig it China's way. That's not like, that's not a controversial statement. That's just the way it is. And, fine, let them have their great firewall. Let them have their countrywide internet. But while they're doing that, we can focus on the rest of the world where we see innovation centers in like the US and Europe and elsewhere. And we can see that things like the China ban is just going to promote usage and adoption of things like decentralized exchanges, in particular ones like Uniswap, SushiSwap, and in particular, one of the ones that I want to talk about today is Bancor, because Bancor is getting, in the coming months, getting ready to put out some pretty big updates, V3, if I guess is what they're calling it. But yeah, they're going to be announcing that soon. So I think this is a good buying opportunity for what Bancor is doing from a DeFi perspective, what they're doing from, just kind of that like liquidity provider perspective. They're kind of like the beating heart of DeFi. They're trying to be one of those hubs with many spokes. And so that's where I think when we see the market react like this, when we see a pullback like this, where we see an overreaction to something that is honestly really not news, where the market typically goes after that, where the crypto space typically goes in terms of what it's favoring in those times, in the extremely bullish moments, is quality, is projects that are doing stuff that is innovative, pushing the envelope, just pushing this direction of like new initiatives like DeFi. That's where crypto goes when things are bearish. When it's a very bullish market, we kind of see more things like very state-of-the-art, NFT kind of stuff, meme coins, stuff that doesn't make as much sense. But when we see lots of fear in the market, when we see it pulling back like this, we see a move towards quality, stuff that people can feel a little bit more secure taking a bet on. Even if, crypto is volatile. Yeah, it's not exactly a guaranteed bet in any regard, but where people are more secure is in, the big sectors, your top tens. If we go into categories, we can see, it's really like the smart contract platforms that are going to be doing really well. Of course, my internet is not going very fast right now. Okay. And this is where I would see or want to place bets on what I think is going to be doing very well, especially in the next month, as we talk about October 21 coming the next couple of days. Where I'd be looking in particular is Avalanche, for example, who just put out a $100 million DeFi incentive program to basically steal some developers, some projects away from Ethereum, because Ethereum, after EIP 1559, has basically, I wouldn't say stagnant or depreciated or anything like that, but it's controversial. It's not exactly addressed some of the problems that maybe some people thought it would. Now, it wasn't positioned that way, but the case is that, hey, I just bought an NFT today and I had to pay almost like the amount of the price of the NFT again in fees. I think it was like $200, and I paid almost another $200 in fees. And I know I can get around that with like Polygon, and I know there's other ways to do it, but I just wanted to see like, what is that like right now? And it's egregious. It really is. You can't have a free and flowing market when fees are that high. So that's where we see projects like Avalanche. That's where we see projects like Polygon. They're going to be standout winners in the coming months. And there's very good reasons for doing so. Additionally, talking about NFTs as a trend, I don't think that one's going to go away necessarily. In fact, what we just saw today is some news is that Twitter is really starting to experiment and try to roll out more of this like NFT integration with their platform. So this Twitter video is one of the devs at Twitter kind of talking about some of the ideas that they have and some of the things they're working on. And one of them is just like collectibles and like, I don't know, things that are going to be very work very well in a very light social media platform like Twitter. I think it's a perfect match. And I think it's something that's going to bring a lot more, just awareness of what NFTs are and the possibilities when they get integrated with something like a social media platform, which I think is a completely new and interesting venture that we're going to see a lot more of. We've also been talking a lot about NFTs and gaming. And so seeing NFTs find utility with a crossover of an existing platform or industry, I think that's a really big step. I think that's something that we're going to keep seeing more of, more capital, more users, more adoption, more innovation in this regard. It's an exciting thing. And it's something that's going to get people talking again. So when we see, hopefully in October and November, a swing back to the upside, one of the first things that people are going to gravitate towards is this new venture, this new part of NFTs plus DeFi. And I think that's really exciting. I think there's a lot of opportunity there. So that's also where I see a project like Tezos doing extremely well, because it's blending a lot of this smart contract stuff with NFTs. That's where we're also seeing projects like Avalanche start to really make ground. So these sorts of projects, I think, are just going to do phenomenally well over the next year. I think this sort of being like right at the center of the target in terms of what's hot right now, and having a solution set to steal some of Ethereum's thunder, be right there when people are starting to gravitate back towards the space, and responding to things like China cracking down. That's where we want to be placing our bets. Basically, we want to be very cognizant of what's going on. So guys, I think another thing that's happening right now is this sort of like uncertainty around regulation, and what is Yellen saying, or what is Geisner at SEC doing, what is Congress doing, all this stuff. It's all bloviating. I think that's more or less what we could draw from that. Yeah, it's a little bit frustrating to watch, but if we take this as a long-term approach, if we look to this as like, hey, what's really the big deal here? Are we going to see the US copy China in this respect? And I think unequivocally the answer would be no. I think there's many reasons why the US would want to continue to foster innovation within its borders and not lose out to China. In fact, do the opposite. This is an opportunity for the US to embrace what crypto has built in the last decade and continue to, help garner that. Not to say that it's, Bitcoin is used for criminal activity and, it's so wasteful and any of this really ridiculous nonsense. To say this represents a piece of the future and we should invest in it as a society. That is something that I think hopefully we'll see more of, but I think we're going to see common sense regulation sooner rather than later. So that's what's going to 10x this whole industry overall. and the platforms and the sort of players that are well positioned when that happens, I think are going to do phenomenally well. So those are some of my picks for the next month or so. I think it's yeah, if you look at the daily chart, it's not exciting or it's a little bit fearful, but we have to take a bigger approach to this. We have to look forest rather than trees. And we have to see that there's a lot of opportunity. There's a lot of really good reasons to be in crypto, be supporting crypto. I mean, just wind back the clock a year, maybe a year and a half, and when things were going absolutely, catastrophically downwards. And to see how much we've done, see how far we've come in that time, and to see just try to project out just a year from now where we'll be. I wouldn't want to be in any other space. I think this is like the most exciting time, the most exciting space. And certainly when we're seeing kind of more of this return to fear about things like rates, which Doc will definitely get into, when we see fear about things like global supply chain and things like that, this is where crypto shines, is helping people to move beyond the status quo and to think about how we can use innovation to solve today's problems. So anyways, that was a long tangent and I'm going to take a drink, but hope you guys are doing well. And we're going to shift into talking about this from a market perspective, from the charting perspective. So Doc, over to you.
Hey, before I let you off the hook with that, do you see with this current administration in the United States, do you see them as being a friend or foe of the crypto space? Or do you see them as being like, we don't even know what the hell it is, and so we're just going to let it stay over in the corner there?
Unfortunately, it is a lot of the latter. But this is actually something that I've seen the Republican Party really start to at least try to get behind, or try to put forth regulation and legislation to try to make this a more transparent, more like let it work with the existing financial system. That's not to say that unequivocally it's all Republicans being pro crypto and whatnot. There's definitely Democrats too, but this administration has not made it a priority. In fact, for the infrastructure bill to be at its current state with some of those really just awful initial language in there, still kind of like it's frustrating. We do need to see better representation for this industry on Capitol Hill in those sorts of conversations about how do we regulate this industry in a proper and meaningful way that isn't going to kill innovation, isn't going to lead to brain drain and people leaving the country or whatever. We want to foster this. We want to explode it. This is a dynamite keg if we let it go off. It's so much there if it's allowed to play by the rules.
Yeah, the one concern that I have would be is if Liz Warren always wants to be the the protector, the benefactor of everybody. But I think she may be so, a little bit too zealous in that she may be trying to protect us against ourselves, which we absolutely do not need right now. So that would be my one concern, is that we don't get the Senate turned sour against us, because then we'll get they're going to say, well, China turned this stuff down. Why wouldn't we be doing the same thing? And we absolutely, like you said before, we do not want to be going down that road.
Yeah. The thing these days is that the current environment, this sort of capital influx into the public equities markets, basically all the money printing that they did over the last year and a half, what this has pushed and enforced and really just created this new norm around is that risk is the new normal, right? People are increasingly having to be pushed away from things like bonds and CDs and that sort of stuff into more equities and more risk on positions. That's just the trend over the last year. You'd basically be betting against the stock market to be doing otherwise, and which is not a good bet at all. So what this has done is that, people have to be a lot more capable with their investments. So that's where we've seen the rise of the Wall Street bets, type investor, you know, it's an interesting sort of dynamic where, yeah, people have to be a lot more in control, have more agency, because there's so much information out there that they can. They don't have to listen to Wall Street anymore. They can be their own bank, their own broker, basically. You know, go out there, do what they want, and to have all that, to be like pushing people towards more of a risk-on environment while still holding them back to say, hey, you know, at 18 you can go smoke, at 21 you can go drink, if you get a driver's license you can drive a car, you can go gambling, but how dare you suggest that you can trade securities with any modicum of like, you're nobody unless you're you know, you've someone of status and wealth. How dare you suggest otherwise? You know, that's one of the most I would say, yeah, it's right to kind of what this is leading towards, this unstoppable force and an immovable object. But increasingly people are feeling more and more pressure of like, hey, we got to go risk on. I have to be able to, you know, take riskier and riskier and you know, bets, basically, because there's no alpha and safety anymore.
You're absolutely right with that. I mean, look, guys, I started this 16 years ago. I started trading for a living and dealing with risk assets, and I was considered to be a freak at that time by anybody, because it's like, well, aren't you buying and holding? You know, aren't you investing in good companies and all this stuff? And everybody was thinking as though it was still 1955. And there was a massive compelling, you know, impetus in Congress to like go after these guys and tax them, tax all the high frequency traders, tax everybody, and, you know, create revenue from this. And you'll notice that they have backed off of this, which is because over the last 2 years, what I've seen is completely, we've hit a tipping point for retail traders coming into the space. And it's been incredible. All right, guys, I am going to switch over to the charts and give Mav a break here. So here we go. Let's take a look at the charts. Now, what we're seeing here, this is volume profile, and it's not something we talk about quite a bit, but it is one of the most fundamental things. What you'll see here is on the right-hand side, this is the amount of volume that's transacted at these prices. And when the histogram is high over here, this is where you get massive support. And where it's low down here, this is where the price will tend to just rip right through there. These are called high volume nodes that are in there. This is called the point of control, the red line. This is Bitcoin versus the US dollar. Now, we are showing a bear flag at this point, but there's a hell of a lot of support down here. Number one. Number two, descending patterns like this tend to break to the upside. So right now we're in a very important, I'd say, tipping point. We're either going to be sitting here breaking out higher in the near future, or we're going to be falling down into this range. If we fall down into this range, we're probably going to go all the way back down to 30,000. I don't want it to do that. But again, what I wish for, the market basically will laugh at, right? So don't vote with your ego on these things. Vote with the price levels. If you see the price breaking down through 40,000, probably heading down into this range here. Okay, so keep that in mind. Otherwise, if you see this breaking this ascending pattern or descending pattern, excuse me, then more than likely we're heading higher. So that's all good. Okay, so that's just BTC. Ethereum's kind of showing the same exact pattern here. No problem there. I do want to go into some of the assets that you guys are requesting here, like Aapx. Okay, the only way I can chart this is with wrapped ether. I don't have any kind of USDT on this one. This one does not look good and is setting up a lower high. We have a downtrend in the weekly and the daily charts. So AmpNet not looking good here unless there's a different chart that I can see versus US dollar. This versus wrapped ether doesn't look very good. Okay, MBOX. Let's see. We got MBOX versus Tether. Let's take a look at this one. Again, we have weekly downtrend. Weekly downtrend here. This one has not been around for very long and is not being accumulated. So here's what I will say about this. Now, again, you have this descending pattern like this. What I'm always telling you guys is to buy things that are heading higher in price. Don't buy things that are heading lower in price unless you have a very, very long time frame. So what you would look for is look for the price getting above this level, which is going to be 550, because that represents a new higher high as well as a break above a descending trend line. So there is a very high probability that if it gets above 550, it's probably going to short squeeze for a while. So look for a setup like that, but otherwise I wouldn't touch it unless it hits 550. All right, next one is COTI. COTI. Let's see if I can find something on this one here. This is Cody versus Tether. This one looks great. So, right, this is a weekly uptrend. This is the sort of things that we want to buy. We want to buy things that are heading higher in price. I don't know who told everybody to buy the dips. Buying the dips is not this. Buying the dips is not when you're trading something like that. You'll run that thing into the ground. So people that traded between 2018 and 2020 can tell you that what is low can go lower. This is what you want to get. You want to get something like this. You want to look for pullbacks on something that is trending higher. So this is a great looking asset. This is a nice little pattern that it's breaking out of, almost hitting its upside target here at about 68.70 cents. I like that one a lot. Okay, next one that we're looking at here is QANX. QANX, there we go. All right, I'll get it eventually. Now, I don't have this one either with USDT, but I do like this pattern. This looks like it's coming out of a very nice basing pattern here. Okay, so it's very new, very likely to set up on this weekly chart with some type of higher low. And then as it breaks into a higher high, this is really where it's going to go. Now, this one's pretty cheap, or at least versus wrapped ether on this, but it looks to be a good pattern. Looks like the volume is coming into this one. It's still very, very early on that one. Okay, Solana. Everybody wants to talk about Solana. This one is, former rock star. The problem that we have with Solana is Solana has kind of gotten ahead of itself. So on the weekly chart, we're still showing exhaustion on this one. So this is what I've been telling the members in Elite, is that probably is going to flag out like this for a few weeks. And when this yellow line gets back up into this area, that's when you want to look for the breakout above here. Now, if you want to look for a super value, maybe this is going to go down to 60, maybe it's going to go down to 80 or something like that. It's tough to buy these on a dip because right now the dips are being bought on Solana. So easier to buy a breakout than it is to get a dip on here. You may be left high and dry. Okay, the last one, and I'll look at the Digibite. We haven't talked about Digibite in a while. What's going on with Digibite? Not a whole lot. Not looking really good right now on the daily or weekly chart. This is the sort of chart you want to avoid, quite honestly, right now. Good old Digibite. Looked like it was doing great until this spring, and then it's just sucking wind right now. So I would avoid this one until it starts to break into higher highs and higher lows. Okay, let's see. I'm getting a few Algorand. Okay, so let's see Algorand. Algo versus US dollar. Let's see Coinbase. All right, this one too is also, it's got the same kind of pattern. It's already broken out, but it's in this massive sort of same looking pattern consolidation that even Bitcoin is in, right? So it's a lot of energy. And if we go out to the weekly chart is still in exhaustion. So this one may be but watch the 61.8, because if it falls below 61.8, you don't want this anymore. Okay, somebody's asking for Floki, and I'm not sure if I know where this one is. All right, well, we got wrapped ether on Floki. We'll take a look at this one. Wow, looks pretty strong. Looks pretty strong. Okay, pretty noisy, but I like the volume coming into this. That does look good. This is a fairly new coin. Okay, RPL. RPL. All right, here's another wrapped ether. Wow, this one's looking good. And what I like about this is this has got that sort of cup with handle look to it. This is sort of the cup with handle, although there's not much of a handle here, but there's a nice neckline here at about 0.01. And the measured move for this one would be about the same distance to here. So that's a nice measured move. This one looks pretty good, although it may be out of gas right now, may consolidate right above that neckline in the short term. Okay, so that was RPL. Let's see, let's go to Keep, and we'll do a couple more here, and then we'll let you guys go. All right, Keep Network versus the US dollar. Let's see what's going on here. Doesn't look good. Does not look good. It's auguring into the ground. Don't like it. Okay, so Hex. Let's take a look at Hex. We have Hex versus the USDC. This one looks awesome. Has looked awesome for a long time. This is a big time consolidation that's happening at the weekly chart. It's not ready to go yet. So hold on to this one. Look for dips on this one. Now this is the sort of chart that you want to look for pullbacks on. Accumulate into pullbacks. This is heading higher. But right now it's in exhaustion, more than likely going to be that way for another few weeks. Okay, let's see, Hex. All right, VRA. You guys are killing me today. This is great. All right, VRA. Veracity. Okay, this is a weekly chart. Veracity's not really looking all that good right now. I would wait on this one. This is coming down off of an early rise, but overall this one has no direction. Kind of a really, this is a cup with handle that never broke out. So that's kind of a failed breakout to me. So I would wait on this one until it shows some strength again. Okay, Ren versus the US dollar. Another kind of a sloppy chart. So this one should break above 1.2. This one should break above 1.2. I'm starting to see some pretty good volume coming into here, but this one needs to break 1.2, and it needs to break that on big volume. So this is where you use buy stops above there. So you just forget about it, set up a buy stop up there, take yourself into the trade if it breaks 1.2. XDC. I haven't looked at that one in a long time. XDC. Okay. Kind of sloppy, kind of volatile, kind of grinding higher. This one is all over the map. It's not a very linear chart. I mean, it's an okay trading opportunity, but this one's taken forever to get anywhere. Okay, let's see. Rose, just a couple left. Rose is another one that is not looking good short term. It pumped, it got above. So this is the failed breakout. This is your old basing pattern, cup with handle, and it broke the wrong way on the handle because the rest of crypto is sucking wind and everything is sucking wind in September. So this one is a technical failure right now. So I'd stay away from this until it fixes itself. Okay, let me just do a couple more because I'm about to lose my voice here. All right, we'll do Cardano. Good old Cardano. All right, so what's going on with Cardano? Well, overall, looks pretty good, right? Looks pretty good overall. We have a nice weekly chart here, which is starting to really get somewhere, but it's in a pretty serious pullback with the rest of the assets. So this is going to have to reverse. I would wait until it reverses up. I wouldn't buy pullbacks here because you don't know how low this is going to go. Wait till this reverses above about maybe 250. I would say 250 or so. All right, one last one. I'm going to do sushi and then we'll cut it back over and we'll wrap up for today. Sushi versus USDT. What's going on here? That's an ugly chart. I apologize. This is just not pretty. There's better assets to trade versus this one. This is a longer term auguring into the ground. All right, guys, back to the middle here. That's it for today. There's about all I can do. So let us know if you have any final follow-up questions. Mav, let us know. Do you have any follow-up for everybody out there?
Yeah, so I kind of realized I didn't talk about, I know this video says 5, but I only talked about Bancor, Polygon, Avalanche, and, oh man, Tezos. Those were the 4 I talked about briefly. And the other, I'd say 2 that I want to talk about, I've seen some of you guys talking about. Today is DYDX, is absolutely on fire. And I think one of the reasons for that is a lot of the derivatives traders from China are jumping ship and moving over to there. They also had a really big airdrop recently. So if you're able to take part of that, congrats. But as US citizens, I don't think we could. Which is just another reason we're looking forward to common sense regulation in the States. The other one is Polkadot, is another great alternative to Ethereum, continuing to do really well on the DeFi front, particularly the IDO front. I've been perusing some of the Polka Foundry or PKF ticker, some of the IDOs that are getting listed on there, and I think they're pretty cool. Some of the ones regarding like gaming, and there's one called like Creaticals, which is lets you kind of like almost contract out like an NFT. So if like you're a company and you want to dabble in companies, you can get people to make NFTs for you using Creaticals. Or there's one like Mintress, which is doing DeFi stuff. There's a lot of cool stuff being built on Polkadot, and I'm kind of saying that it's going to see a nice rise in October. But anyways, guys, that's really all we have for today. We went way over our time, but hopefully it was insightful. Hopefully you guys are doing well out there. I know it's a down market today, but we see that as an opportunity. And if you'd like to join us as we talk about this kind of stuff, first and best place to do so is on our Discord. We've been having some awesome chats. Recently, we do a hour-long chat, voice chat, every Thursday with our Omnia members and those members who are a member of our other service, ReadySetVision, which is all about on-chain analytics. We just put down a little bit of a wall of access on ReadySetVision. So if you got in before we did that, congrats. But otherwise, next week we'll make it free again. But right now it's only for paying members. So yeah, we're we kind of had to turn people away. We're signing up so fast. But you know, that's kind of fun. I think there's a lot to like about on-chain analytics. It's sort of the way to like see the matrix code of, you know, the crypto markets, if you will, and sort of outsmart the markets that way. It's really cool stuff. And I think if you like taking a big look at things, kind of seeing things from a macro view, it's fascinating. And the book is still being written on it. So what better time to get in than early? But anyways, yeah, there's free links to all of our services down below. And otherwise, yeah, it's time for us to go get a drink. And hopefully you guys do well. But as always, thanks so much for hanging out with us. Thanks so much for being a subscriber to this channel and a member of this community. And we'll be back here this time next week. Hopefully we'll see an upsurge in the market between now and then. But anyways, Doc, anything else?
No, I just thanks everybody for checking in today, and we will see you guys next Wednesday. Same bat channel, same bat time.
Hey. Cool. Take care out there, guys. Cheers.
Okay. See you around.